Friends, now we will look at the Q4 results of HDFC Bank. It is professionally managed, wonderful bank. Number one private sector bank. Of course, ICICI also is there, but HDFC is performing better than ICICI in some respects. Now we'll see the results briefly. Interest income is 79,433.61 crores. 79,433.61 crores. Now it is 67.06% higher year on year, 1.83% only higher quarter on quarter. Still it is good. 67% higher year on year is good, 1.83% quarter on quarter. Of course, it has not fallen back. To that extent, it is good. Other income is 44,957.74 crores. 44,957.74 crores. That is 367.8% higher year on year, 21.48% higher quarter on quarter. Now interest expended, we have seen interest income, now interest expended 43,691.51 crores. 43,691.51 crores interest expended, and that is 93.27% higher year on year, and that also is just 1.04% higher quarter on quarter. So quarter on quarter there is not much increase. Okay, net interest income, that is interest income what has come in minus what has been spent. Interest expenditure also we have seen. Net interest income is 35,742.1 crores. 35,742.1 crores, and that is 43.3% growth year on year, 2.81% growth quarter on quarter. Now operating, of course, other expense is one of the highest expenses, 31,571.54 crores, 31,571.93 crores, 32 crores. Now other expenses we have seen it is higher by 336.79% higher, 4.31% quarter on quarter. Operating profit is 31,571.93 crores. 31,571.93 crores. That is 58.16% higher year on year, 22% higher quarter on quarter. That is good. Operating profit has come in neatly. Provisions have gone up. They have made some conscious provisions. Total provisions is 13,810.54 crores. 13,810.54 crores is the provisions, and that is 334% higher year on year, and 199.9% higher quarter on quarter. Provisions are very high in this quarter. Profit before taxes is 17,761.39 crores in Q4, and that is just 5.83% higher year on year, and lesser by minus 16.39% quarter on quarter. Tax has come down during the quarter, minus 251.48 crores. So that has helped net profit to some extent. Net profit is 18,012.87 crores. 18,012.87 crores is the net profit, and that is 42.57% higher year on year, and 1.66% only higher quarter on quarter. Equity is 759.69 crores. Basic EPS is 23.2. Now earnings per share is 23.2, book value is 600.8. Now for the year, if you take the consolidated profit after tax for the year ended March 31st, 2024 was 640.6 billion, up 39.3% year on year. For the whole year, this year compared with the previous year, 39.3% higher, good enough. The bank's credit performance in all segments remains healthy. Gross NPAs are at 1.24%, that is good. So, therefore, it has increased its floating provisions this time. Floating provisions are 109 billion during this quarter. Credit cost ratio was 0.42% compared to 0.67% during the year ago quarter. So, credit cost ratio has come down decently. Now, let us look at the balance sheet. So, the performance during this quarter is reasonably good. It is not as outstanding as it was in the pre-merger days. It has merged with HDFC. Prior to that, HDFC Bank used to produce wonderful results. Now, after the merger, it has come down slightly. Now, the total balance sheet size as on March 31st, 2024 is 36,176 billion compared to 24,661 billion as on March 31st of previous year. So, balance sheet size has increased considerably. Deposits have also increased by 26.4%. CASA deposits have increased by 8.7%. Savings bank deposits at 5,987 crores and current account deposits at 3,100 billions, not crores. Time deposits are 14,710 billion, an increase of 40.4% compared to the corresponding quarter of last year. CASA deposits are 38.2% of the total deposits. Decent. It was much higher also sometimes in the HDFC Bank in the pre-merger days. Gross advances are 25,078 billion rupees, which is an increase of 55.4% year on year. Domestic retail loans have increased by 108.9%, but commercial and rural banking loans have grown by 24.6%. Overseas advances are only 1.5% of the total advances. In the year ended March 31st also, net revenues are very good, 1,577.7 billion against 1,180.6 billion the previous year. Net interest income has crossed 1 trillion, up 25%. Profit after tax is up 37.9%. Capital adequacy ratio as per Basel III guidelines is 18.8%, but last year it was even more, 19.3%. But regulatory requirement is only 11.7%. Compared to that, the current ratio of 18.8% is very, very comfortable. So, common equity tier 1 capital ratio is 16.3%. Dividend 19.5% per equity share of rupees 1 for the year. 19.5 rupees against 1 rupee face value. Network. As of March 31st, 2024, the bank's distribution network was 8,738 branches. 8,738 branches, impressive. And last year it was 7,821. So comparatively it is much higher. They have added reasonably. 20,938 ATMs are there across 40,065 cities and towns. Last year it was only 19,727. Apart from that, there are 15,182 business correspondents which are primarily manned by common service centers. The number of employees is 2,13,527. It has increased compared to last year. Last year it was 1,73,000 and odd. Now it is 2,13,000 and odd. Asset qualities we have seen. I will mention again. Gross NPAs are 1.24% of gross advances as against 1.26 last year. 1.26 previous quarter, 1.12 last year. Net non-performing assets are 0.33% of net advances. Now, I remember HDFC Bank used to produce the best non-performing assets ratio at one time. But now you know what has happened. Bank of Maharashtra is producing even better ones, better ratios, NPAs. For the last 2-3 quarters I have watched, Bank of Maharashtra has produced better ratios. HDFC is a much bigger bank, so NPS will be slightly higher. Subsidiaries, HDFC, there are some subsidiaries. I am not going in detail into their performance, they are all performing well. HDFC Life Insurance Company Limited, HDFC Ergo General Insurance Company. So there is a life insurance company, there is a general insurance company as subsidiaries of HDFC. Then HDB Financial Services Limited, HDFC Asset Management Company, HDFC Securities Limited. So one factor that we have to mention is the HDFC Bank got amalgamated with HDFC Limited. Now everything is HDFC Bank. And that happened in 2023 July 1st. So the comparisons are not strictly correct. But performance is good. That is what we have to see. HDFC Bank is very professionally managed. Every quarter there will be improvement in future also. But its price earning ratio is usually high. Doesn't matter, but at that price earning ratio, if it is going on improving its income, etc., and net profit, income and net profit, then even at that price earning you will make good money. See, that is the normal trend in all companies. HDFC Bank is also a very, very good company. It is likely again to become an outstanding company. It used to be an outstanding company. Thank you for listening. I will be back with you with another very good company.